Welcome everyone, welcome to this video. It's Victorio from TRADEPRO Academy. You may know me on Twitter as Torio Trades. We had a little bet between George and I on Twitter, and first one to reach 300 subs kind of just tells everyone what they do in the markets, breaks down their strategy. So I'm going a step further and just breaking everything down for you guys. So I'm just gonna outlay it on this paint document, like super simply about what I'm gonna be talking about today, rather than making a slide, this and that. I want it to be a little more organic and give you guys all the info that I could possibly think of when it comes to my strategy, my day trading, whatever it may be. Now, first things first, I'm going to talk about, let me see here. I'm going to talk about my strategy, obviously, slash trading style, let's call it. Number two, I'm going to be talking about what tools I use, which are like indicators, right? Tools, indicators, interchangeable for me. What platform I use. I'm also going to be talking about which stocks I trade and how I find stocks to trade. And then we're going to also be talking about options pricing and selection, along with pre-market prep and levels. And I'm also going to be talking about setting trades up with the options chart and underlying chart, right? I think they're both two important tools that we need to know, and that's pretty much going to be the premise of what I'm going to be talking about today. Now, I'm just going to move this to the side here. We're going to be using Paint a decent bit. It's not the most professional use of equipment here, but I think it's effective enough for what I'm trying to convey today and what I'm trying to teach you guys today. Now, there is a lot of things to cover. It may be a longer video, that is okay. But let's go ahead and start with this. Number one, I want to talk to you guys about strategy slash trading styles. Now, the main thing that I do is look for trends, right? I'll be looking for trends, whether it's up, down, whatever it is, right? I'm going to be looking for market trends and for those trends to hold. One of the most consistent trading strategies that I have found work for me is the pullback strategy. So no matter what the market situation is, conditions are, whether it's a slow or fast market, I have found that the pullback strategy is kind of what makes the most sense to me, and that's what I use a little more aggressively. So even though I post levels, I'm going to be talking about that as well. Some of the levels and ideas that I post, even though I post those, let's say something at 300, doesn't mean it hits that level and you buy it or sell it. There's a little more to it than that, and I'm going to be talking about how to identify and qualify those. So the main strategy that I use is going to be something like pullback trading with confluence trading. So what is confluence trading? Confluence trading is when you have 3, 4, 5, however many, at least 3 qualifiers that you must see come to fruition before taking a trade. Whether it is the structure of the market, higher highs, higher lows, whether it's the pivot point, whether it's volume, whether it's an indicator that you use, I want to keep it consistent and have 3 qualifiers that I mainly go about. So number one for me out of these qualifiers is always going to be market structure or price action, call it what you will. And that involves identifying levels, right, of support and resistance. And number two, following how the trend moves. So this could be found with just general price action. It could be helped with EMAs, right, and confirmed with volume. So some of the tools that I use are going to be in here, but we'll skip that for now and kind of talk about these trends, like what do these trends encompass, how to find these trends, your price action analysis, so on and so forth. So naturally, there's 2 main trends that I'm interested in the options world, which is going to be the bull versus bear trend, right? And keep in mind, I'm only going to be talking about pullbacks rather than the breakouts. Breakouts are something that I do on a rare basis, and I wait for like big volume confirmation, for example. Now, when we look at bulls, we want higher highs and higher lows, right? When we look at bears, we want lower lows and lower highs. So this will continue the trend as long as these criteria are met. Should these criteria fail, then the trend will fail. So, number one, how does a bull trend fail? A bull trend fails initially by failing to print a higher high, right? So, if I have a trend like this and we have a higher high right here that broke this top and a higher low from this area. If we come down, all I want to see it is above this higher low, right? If we break it, then that's not the best indication. If we fall right at it, that's fine. But the idea is stop somewhere above it and create a new high past this one. That is how this trend is going to continue. Very, very simple understanding of this, but it's very effective. You'll see as I break it down. Now, before I get too far into this, the charts that I use are going to be a 1 hour, a 10 or 15 minute, a 5 minute, and a 2 minute. So these are the charts. Just keep them in mind as I go throughout this. I'm going to try and make this as concise as possible. So in this trend, back to this trend, if we fail to make a new high and we actually create a lower high, I'm under the impression that there's going to be somewhat of a failure in the trend before us. Now, the same thing could be said in a bear trend, right? How will the bear trend fail? And the bear trend for me fails with a failure to make a lower low. So if we're just on our way like this and we're creating lower lows, lower highs, lower lows, lower highs, but all of a sudden we pull up to an area of interest, right, for the next push down, and we fail to make a lower low, I could anticipate the potential turnaround. Now, this is qualified and confirmed a lot with the overall volume that's coming in on these pushes up or down. It's also confirmed with maybe some moving averages. So the basic trading strategy and what I do in these markets is just on a structural basis is going to be finding trends like this and seeing if they can print higher highs and higher lows, right? And I'm looking for pullbacks. So in a bull trend, the pullback could either bring you, let me just draw some lines here. The pullback could either bring you to the prior top that we had shaped up on, right? It could bring you to the impulse leg. The impulse leg is the area which we started the move up, or it could bring you anywhere in between. It's just a matter of finding out where it actually stalls out. Now, this could be found on a 2-minute chart and other confirmation tools that I use, and I'll show you guys. So ideally, one of these three areas holds. And to add to that, I'm going to throw in some indicators or tools to confirm that this is going to be the case, right? That I am going to confirm that this area actually exists. So we also have the bear, right? Same thing. Let me just draw some wonky lines, and we could either pull back to the area at which it broke. Now keep in mind, these trends could be seen on any time frame, right? I do more intraday time frames if I'm going to day trade. So it's going to either hold the prior broken low, it's going to hold the impulse area, or it's going to hold somewhere in between, right? That's how the bear is going to form. Now, if I just take a look at just a clean chart without anything on it, let me take a look at Tesla since it's open here. Give me 2 seconds. Let me just remove some of these indicators. What I've done with Tesla here is we've popped it up on the 5-minute chart. And yes, we do gap higher here. We gap higher, but the idea is I want to see how this trend is going to continue. So I'm going to give it some time throughout the day and let it do its thing, right? So there's no real clear trend that we see within this pennant, but what we could draw is right now we have a low somewhere here, right? That had been formed at this peak lower. We could form a low right here. We could form a impulse area right here. We could form another area right here. So the idea is, if we actually start trending, I'm going to look for confirmation that this thing's going to the downside. So what I mean by that is, you can find some of these areas. You can see this high here, this area of rotation here. And if we were going to make a bull move, so let's just rewind this a little, even though we know what happened. How do I do that? So let's just get rid of that candle, right? Assuming that we just have this information without diving too deep into this. Assuming we just have this information, we're forming higher highs and lower, or we're forming higher lows, sorry, and lower highs. So the idea is, one of these areas has to get broken for the trend to confirm to the other end, right? Either the most recent higher low gets broken, right, and we flip to the downside, as I mentioned in a bear trend, or the most recent lower high gets broken, right? So if we break this area and we flush this area, we have two areas of interest for the sell side to hold out, right? Here, more likely, because this is the key area that had been broken. Here, if we break it by a significant amount, am I expecting it to hold as resistance? So big red candle, you can see we haven't really broken the lows yet. I would like to see a more significant break of those lows. There you go, right? So some traders may be looking at this and saying, okay, well, I need to see some sellers come in here, and I'm just going to short it here and see if we can get that continuation to the downside. Now, it's possible, but that's where the confluence trading comes into play, because you don't really know where it's going to stall out until you take a look at a different view of the market. So you can see it does stall out temporarily, right? What kind of volume is leading up into here? Pretty weak volume, and this area gets tested, right? This area gets tested, finally a stronger rejection, maybe a sell wave from that level, right? A little more confirmatory. So just by drawing levels and understanding where these structural changes are made, you can find opportunities in these markets. So whether it's on a intraday basis like this, or even a slower day basis like this, you can find these areas. So if I just grab one of these tools and say, you know what, this was the prior high. If we break this high, I want to see if we can pull back into it. So there's multiple areas, two levels here where you can look to buy Tesla at around 578. Goes up about, what is that, $4 or so, doesn't make a new high. That means stop buying this level, right? To create an upward trend, we need to have that upward momentum. So this is just a start of how I look at the trend and how I look at the price action. Now, there's more tools to add to this confluence. Number one, why don't we look at a name that I trade a little more frequently in the SPY? So, okay, bar replay tool not connected. Fine, whatever. So on the SPY, if I'm looking at it structurally, let's start from ground zero, right? A 1 hour chart. If I'm on the 1 hour chart here, I'm just going to be drawing key areas of support and resistance right before the day even starts. I know that this was yesterday at 3 p.m. Huge area of support resistance right here, right? Because this was the prior top. If we break that, I am to believe that if we hold that as support, we're going to see the next leg higher, right? Maybe into some of these resistance points up ahead, right? Maybe into some of these resistance points up ahead, whatever it may be. I can draw another area here where I see some very strong support and resistance on the SPY. And I could do that indefinitely. Now, the thing with this is, I don't want to draw too many levels so it gets like wonky, or if it doesn't get wonky, whatever it is, right? I just want to keep it simple on the 1 hour chart. If I go to a 10-minute after that, that's my next area of interest. On the 10-minute, I'm going to go and I'm going to start confirming that some of these levels are actually levels to hold out, right? Maybe I can draw some in-between levels, but I just want to make sure that these are some key areas of support and resistance before I dive into it a little too much throughout the intraday. Because if you're trading on different larger time frames, you can have different perceptions of the structure. Because this right now that's pulling back into this zone around 414, this could just be seen as a minor pullback before we do head higher, as long as everything else confirms, right? Which is fine, but I'm doing it on a day trade basis. So throughout this, once this level is broken, I'm going to be looking more towards the short side. So if I go to the 5-minute chart, just based on pure structure, right? Off the open, we're pretty much getting long, right? Because this pullback has held. I just want to get along and have a stop under here to make this new high, right? On the 5 minute, you could even look at this and say, oh, this is the pre-market top. Whoops, TradingView is not letting me draw. Okay, weird. So I can take this top, for example, and say, you know what, like this is the pre-market high. If we break and pull back, that's another opportunity for us, right? Just based on pure structure, which is great. We get long here, we laugh, right? Now, the idea, if you're looking at a super intraday like this with this 5 minute, means that we cannot really break under this area. Otherwise, the long side is dead, right? Based on this prior broken high, based on this level, we have to push up from this yellow box when we retest it. We don't. And what happens, the area that was once support for the longs that propelled us higher is now going to be resistance, right? But there's also a key support here, right? It's very, very important to look at this on a um, chart by chart basis and on how you perceive it, right? Because I do think this is still a good support zone based on this larger top, but intraday, we're flipping bearish here, right? We broke through these intraday areas that needed to hold. So I'm looking to short here and here on the retest, and this little retest, the break and retest of this area. And then now I'd be looking maybe into 415.90 if we pull back to hold that for the downside, right? Lower lows, lower highs are getting confirmed here. So I'm just going to move this chart to the side. I've talked about how to draw the main levels, right? These are the areas that we want to see either push above or below. And how I differentiate where I'm getting long above or short below based on the pre-market levels that I set out on Twitter and our EchoFin chat, community.tradeproacademy.com, free chat right there, is based on the previous sessions movement. So here you can see the tops, right? You can see these tops. I want to see them hold. Under these levels, it gets kind of ugly to the downside because the trend breaks. The overall trend breaks on a larger frame here, right? So I'm going to be looking for longs probably above like 416.50 and then shorts probably somewhere under 416.20. Now, it's important to note that these levels are identified pre-market, so they could easily change because I could be looking at puts over here, even though that may have not been the part of the plan pre-market, but it is a part of the plan because the market structure actually changes. So why don't we talk about the tools and confluence, right? I think this is going to shed a little more light on what is going on and how we find our levels, right? For calls versus puts, right? Long versus short, and all of the indicators and tools that I use. And we might as well talk about this right here. I put it a little lower, but it should be somewhere here, and how we identify these pre-market areas, our pre-market prep levels. So the tools that I use, other than these different charts, are going to be levels manually drawn. Levels man. I'm going to use, wait, why don't I just type this out? It's ridiculous. So tools slash indicators that I use. So number one is going to be manually drawn levels. Number two is going to be pivot points, standard on trading view. Number three is going to be EMA, right? 512 EMA cloud, 20 EMA, and 3450 EMA cloud. Shout out to Ripster that created these, I believe. And then what else? Volume. Let's just go volume profile. I think based on the understanding off the top of my head, those are the main things that I use. So let's go over these individually, how to set them up, and how I use them for my pre-market levels and ideas throughout the day. How this correlates to this. So the idea of these tools, let's just break them down quickly here and identify here on TradingView where they are, how they can be found, so on and so forth. So based on this, I have them in a drop down here. You guys just saw on TradingView, but you can also find them in this function key here. I just use your typical moving average exponential and your typical pivot point standard. I don't need this. I don't know what this is. I'm honestly not sure what these are, but I'll just keep them there just in case someone else was using them. So I use the moving average exponential, I use a pivot point standard, and the only thing that I change about the moving average exponential is the length and time, and I'll use the EMA cloud by Zamboni Man. So let me just go over these. If I unhide my EMA exponential, just the 20-day EMA right here, and I use this mainly on a 5-minute chart. I'll also use it on a daily chart as well. I'll use it on an hourly chart, but mainly on a 5-minute chart. If I undo the hidden pivot points, you'll see them here, R1 pivot point here, tagged on the SPY and just rebounded today. We have the S1, yada, yada, yada. And the main EMA cloud that I'm going to go through, I'm not really going to go over the 512. I don't think that's that useful, but instead the 3450 EMA cloud. So the 3450 EMA cloud shows me what the general market sentiment is on an hourly chart and also a 5-minute. So let me show you how to create these EMA clouds. I'll just unhide the other one. But if I go into the settings for this, into the EMA cloud settings, on inputs, the short EMA is going to be 34, the long 50, leading period 0. And then when I go to style, I'm going to make everything non-checked off except for the last one where you can see the MA cloud. And then you can make them whatever color you want. I typically go purple and blue for the 3450 and green and red for the 512. Oops. So you can see them here, make it a little sharper. So these are the clouds. Now, with these tools, I also have volume at the bottom and a volume EMA. My volume EMA is, I think, it's 20. So either 20 or 9. I like 20, I guess. So with all these tools added here, we can start identifying, number one, structurally. Number two, how we can anticipate where our levels are, so on and so forth. So the way I like to use this is if we are above all of the EMA, I'm going to be long. If we are below all of the EMA, I'm going to be short. Now, the main EMA that I look at on a 5-minute is going to be the 20 EMA pretty much by itself. So the 20 EMA, this blue line is going to be the main contributor to my 5-minute plan. Now, if I go to the hourly chart is a lot of the 3450 EMA cloud and the 20 EMA, right? If I'm above, I'm going to be geared towards the long side. If I am below, I'm going to be geared towards the short side. So what I'm seeing right now on the 5-minute, right, is that the morning, if we zoom in aggressively here on the SPY, in the morning, in this picture, you can see we are not only above the level that we have identified, but we are above the pivot point, which is all the way down here. We are above the EMAs, right? And we're holding them. We're above the structural levels. We're above the R1. So it just makes sense to lean towards the long side. Where are you getting long? That's another question. So if I navigate what had happened throughout this day, why don't I just take a screenshot of this and we'll look at it on Paint so I can actually draw on it. So let's just take a screenshot of this portion right here and I can use the snipping tool. So pre-market, we have the level here, right? We have the highs, we have the EMAs. So another way to use this for the pre-market ideas, right? Assuming that we've drawn our levels, we've done all the analysis on the hourly, I'm going to go to a 5 or a 10-minute chart and think, okay, well, are we above the EMAs, right? So number one, above structure resistance, right? SR, I'm going to call it structure resistance. Number two, above pivot point. right? This is the bullish case. Number 3, above 20 EMA on a 5-minute chart, right? That's the bullish case. If you just flip these to below for the bearish case, that's how you're going to get your bear levels. So let me just erase all this. So the idea here, pre-market, we've analyzed it, right? We've drawn our levels, we've done all that needs to be done, and we are above the EMAs. So when I say my pre-market levels, and I say above X level equals calls, that means above the 20 EMA, above the structural support equals calls, right? Based on that, I know I'm going to be buying calls. I just don't know where exactly until the market opens. So you can look for breakouts here. You can look for the break and retest, right? Whatever it is. So I'm looking for the break and retest into this zone, right? So I'm getting long the calls somewhere here around 417.30, let's call it, and we move up just shy of $1, like 90-80 cents, right? And that is the call complete. Now, when you follow the structure and you're thinking, okay, how will I continue the upside move and my calls? Well, you have a new zone right here, demand zone, where you want to see price hold out. You also have a 20 EMA, right? When you get too deviated from the 20 EMA, there's a high likelihood we do pull back aggressively. So I want to watch, number 1, the structural zone here. Number 2, the level that we have. Number 3, the EMA. When we come down into the EMA, you want to see buy pressure come in terms of volume at this area, and you want to look at a 2-minute chart, right? Is there going to be enough buy pressure to bring us up? When you crash through the EMAs and the level like this, I'm looking to short the retest into that 20 EMA. Now, it's not going to hold to the exact cent, but you have your levels and your area. So let's just break this down pre-market, how and why. So I have a few ideas from today that I want to just go through quickly for just pre-market activity and pre-market ideas. So I said SPY. So I said in today's update pre-market, I said SPY, Triple Qs, Tesla, Facebook, right? These are my ideas. I said SPY calls above 416.50. So if I go even on the 5-minute, like I've already drawn my levels on the hourly, right? I'm just assuming that I've drawn my levels on the hourly. We are above yesterday's tops pre-market. This means there's pretty high bullish sentiment. We are above the current EMA, right? The 20 EMA on the 5-minute, bullish sentiment. We are above the pivot point, bullish sentiment. Pivot point's going to act as a huge bullish supporter. Now, I said above 416.50 because if we zoom in, 416.50, obviously not to the exact cent, but it is the pre-market area where these 20 EMAs are holding this current price action and structure. So I want to see this guy hold out and this structure continue, right? I want to see that continue, and this is going to be a very strong potential buy area. Now, I said below 416.30 because that's where this structural component breaks, right? That's where we start breaking the pre-market 3450 EMA, and that's where we start flipping to the downside more aggressively. Now, you can wait for this criteria to be met for the puts, or you can look for intra-movement, intra-day potential short activity when the structure actually breaks based on this example where this yellow box actually breaks. So you guys can see how I came up with those ideas. Now, how do I play them? Off the open, here's the open on this aggressive green 5-minute candle that starts right away. You can buy it with the stop under this level, right? As long as you're holding this EMA just right off the open. A little aggressive. I personally wait like 10 to 15 minutes, and I would be buying this slight little mediocre pullback into 417.25.30, which we did in the morning room today, which leads us up to this move higher, right? Based on that and the option selection, right? We're going to talk more about option selection, which options, why, so on and so forth. We are looking for an option that is 30 to 40 delta. So 30 to 40 delta on like a 90-cent move, right? So 90 cents times, let's say 35, you're gaining about $31 a contract. And those contracts are typically around $1, $1.10 on SPY. So it's a pretty significant gain percentage wise. Now, you can see where we shatter that key support structure, right, based on this prior top. These two tops right here, once those are cleared, the downside is going to open up. So even if you're not short from here, you can wait to see the retest of these 20 EMAs for the short side, right? You can short these for the continuation to the downside. You can short the break and pullback for the downside move. You can short the pullback in this 20 EMA. And now what we've done, we are a long ways through the day, and we can identify different opportunities. Maybe some people looked for longs at the pivot point. But if I'm looking at structure and the ideas here that we had shaped up, based on structure and what we know, we have the prior tops, right, that had to hold on the pullback, which they didn't. We flipped the EMA, and now we're pulling back into this area, which could present us a higher low, which means that I'm going to be looking for longs in this vicinity. So if I'm looking for longs and it's Friday, just to give you a quick sneak peek on the option selection, I'm going to be looking at calls that expire next Monday for the day trade. And I'm be looking around 30, so 25 to 35 delta, right? Now, when and why would I get into this trade? So once this shapes up and the idea shapes up on the 5-minute, I'm going to a 2-minute chart and seeing how the buyers interact with this level that I've drawn and see how much the volume comes in. So far it looks pretty good, and it does look like there is some buy momentum. So if I take a position here, I'd be buying the call with a limit. So if I take a look at the options chain, for example, the options chain for the SPY calls, options chain for SPY calls between 25 and 35 delta currently are either 417 or 418 calls. So they're about, the 417s are about $1, which are pretty cheap. And I just want to see an actual strong volume candle on the 2-minute close, right? A big green candle and a nice volume spike, something like this, right? That happened here. So right now, even though everything makes sense, our confluence makes sense, there's nothing that tells me I should be buying it just yet. I have the sentiment, but I don't see the volume. I don't see the buyers, and I don't see the order flow coming in. Here I use Flow Algo. I don't see order flow on call buyers coming in on the SPY. But if I see a nice green spike on a 2-minute chart with a nice volume candle, I get a little more excited for those calls. So I would be looking for calls, entering calls around this point somewhere with a stop just under here, to see if we can climb back into the day. Now, a lot of traders, if you look at like a 15-minute chart, you'll say, holy crap, this looks terribly bearish. Like, what are you thinking? Why would you think that, right? It does look moderately bearish, but I'm seeing the 5-minute switch. I really like the 5-minute charts and how they shape up. Another trick is when you're trading SPY, keep an eye on correlations such as Apple, the triple Qs, and big names like Facebook too. So remember, those calls are about like 98 cents around that dip buying area. We're starting to see some buyers. So we'll revisit and see how this trade went. But that's the general premise of what I like to do and how I like to do it on these charts. So far, we're seeing some kind of downside pressure, but based on the flip, it does look pretty good. Now, if we go to our other names right here and see, okay, pre-market levels, like which names on the list looked good in terms of like levels, blah, 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 yada, yada, yada. So we have to go to triple Qs because I go triple Qs in SPY every single day in terms of levels and like hunting. And if we use our same criteria on the triple Qs, let's start on a 1-hour chart, right? The 1-hour chart today, we had a pretty big zone right here, this blue zone. Why don't we make it a different color so we can see it a little better, or make it a little brighter actually. We have a zone here We can draw levels with a horizontal line, right? Look at these tops from the past 2 days, right? Huge support coming up here. We got another one a little lower, right? We've got another zone somewhere, I guess somewhere here from yesterday, right? And I don't know if these are straight. They're not straight. So we can draw those zones and understand where the key areas are on the triple Q. So based on that, the pre-market, we had above 329.40, I like longs, below 328.50, I like shorts. So if I go to a 5-minute chart, for example, now these aren't areas where you get above and you start buying or you get below and you start selling. Rather, I want to see how they hold up. Can we hold above this three? So the idea was I got it from these lows and this 3450 EMA structure here. So can we hold above this level, above this now box that I've drawn for the triple Qs to move up? Because we got right off the open pretty strong sell pressure. So the sell pressure came in right off the open, dumps this thing way below the support structure. And I'm not necessarily looking to buy or sell until my criteria is met. So remember my confluence. I would like to see that there is rejection here and around this 20 EMA for me to start selling into it, right? Not the case. We get a little higher. Okay, let it break. But what are we doing? We are creating lower lows and lower highs here. We are well below the EMAs. We're well below the buy zone and the interest area for the longs, right? I said 328.50, which is all the way down here, right? And why was that? That was based on some of these lows being broken around these areas, right? We could have easily said under this support zone, but you can be malleable as the day goes on and start changing your analysis, right? So my idea is now that we've broken the zone, we have an area right here where it'll come into the 20 EMA on a 5-minute and it'll come into the prior broken lows. You get a few rotations here. This is amazing. You're looking for puts to the downside, targeting probably the pivot, right? Even though we are above the pivot, if the structure leans bearish based on the EMAs and all that stuff, we are still looking for that downside structure, right? So next up, we had Tesla as well. And Tesla, we did the analysis. Actually, we can skip that one. Facebook is another one. So Facebook, let's go to a 10-minute. Facebook on the 10-minute here, pre-market, we were above this key resistance from yesterday. I just want to see these areas hold, right? 318.75 or so, 70, right, that we have outlined. I just want to see them hold. I want to see buyers come in, pump us to the upside, right? Open, massive red sell candle. Now, another trick that I like to see is how will price hold up around the pivot, because this is a fade. I can buy the pivot even if we're getting slammed under these EMAs for a little fade opportunity right now, right? So with Facebook, that was the fade. You can also look for the short because we're below, number one, these levels, these key support resistance. This box is a little too big, but TradingView doesn't let me make it any smaller. So whatever. So this area below the lows comes into confluence with the moving averages. You're looking to short it at this area. You short somewhere 318.25, gets to the pivot, right? A solid over dollar move, pretty good move, but you can't break a low. You have to get rid of this, right? You need to break the pivot. You need to break key support zones. So just remember pivot areas, good areas for potential fades or for potential stall outs on trades. And so are R1s, R2s, and so on, because you can see R1, good target area, good rejection, good rejection, good rejection. These areas are strong targets and rejection points. So just keep that in mind. So that's how we draw the levels and how we navigate throughout them before the market even opens. So we can get a good idea of what kind of trades we want to take, so on and so forth. So that's how I select calls above or puts below a certain level with my tools that I use. So what platform do I use? Pretty simple, Interactive Brokers, IB. This is a platform better for us Canadians because we don't have access to like TD Ameritrade or like Robinhood. I wouldn't recommend Robinhood, but TOS, Thinkorswim is pretty solid. Other than that, Interactive Brokers is pretty good, pretty low commissions. I think TOS has just like zero commissions, so that's even better, especially if you trade multiple lots and larger size. And next up, which stocks do I trade, right? How do I find stocks? So you can use screeners and whatnot. I use a screener on Interactive Brokers. This is just an active screener, meaning that it just shows me what the largest activity trades are. So most traded pre-market, for example, this what I want to look at. So pre-market, I want to take a look at which stocks have the most activity in terms of their shares traded. So I want to make sure that we have a lot of volume on these shares, because then the options will be more liquid. There'll be tighter spreads, and I could find potential movers from there. So I'll look at this and see what the percent changes, right? Like Ford was good. I don't know what it was pre-market today, but usually Apple is up there, SPY is up there, just to give me like a general idea. But typically the ones that I lean towards are going to be SPY, triple Qs, Tesla, and then like some of the FANG. And then if there's like different things here and there, then I'll take a look at and consider them as well. So that's pretty much how I find moving names. I could also go to my daily charts and find stocks that look like they're going to break out, so I can take advantage of those potential moves throughout the day. So yesterday on Twitter, for example, I mentioned SE. And SE, why did I mention it? Because we had a very strong daily resistance area here that had been tested. And I'm thinking, well, we could get a nice little move today if we break through some of this resistance, which was yesterday's just jolt to the upside. I think another one I was stalking was MU. We didn't really get too much follow through, so this one kind of faded in the wind. But looking at daily charts as well of some of your favorite names can offer you opportunities to day trade even, right? So none of these so far, like Apple, for example, on the daily, we needed to break above 128.04, I believe, which we failed at due to heavy weakness on the triple Qs. So we kind of dismissed that, right? If we look at triple Qs on a daily, they had some opportunity, but they got faded. So that's how I generally find different names, but I stick to the basic ones that I usually use in terms of SPY, triple Qs, and whatnot. So, with that being said, let's talk about options pricing and selection. And then I'm going to be going into setting up trades with the options charts themselves and the underlying. So, what does that mean? To give you a quick sneak peek, let me find a trade. For example, this right here is NVIDIA. This is the options chart actually. So you can see where the entries were. Buying a bid at 385 per contract, selling them, so on and so forth. So this NVIDIA at a 605 call. So it's important not only to watch the underlying chart, but also to watch the options pricing chart. So this is what I mean by that. We're going to go over that in just a bit. But first, let's talk about options pricing and options selection. Let me find a options chain. We'll go through that. Yeah, right, I've done it. I found an options chain here, and this is the options chain on NVIDIA, right? So when selecting an option on the day trade front, you'll notice here on Interactive Brokers, you have multiple different expiries. Now, the 0 days to expire, this is going to be today, Fridays. So with the Fridays expiry, what you'll know is that it is a 0 day to expiry. So the theta burn will come at you fast and hard. So it's very important to understand what kind of options you're selecting on days like today. Now, the rule of thumb for me is on 0 days to expiry, I am not really going out the money. I'm going either at the money or option that is out the money with like a 35 delta, right? Because that's going to ensure that I don't need a crazy move and I won't get just destroyed for something that's super far out the money. So with NVIDIA, right? Based on this option selection, I'm going to make sure also that the option spread isn't more than like 10 cents, to be honest. So that's going to be a main factor as well. You can see this one right at the money. It's pretty liquid. I like to look at the volume as well and the open interest. A very liquid option right here, about 8 cents right now of spread, which is great. In comparison to its other counterparts, 50 cents of spread, that means you're automatically losing about $50 a second you enter into this trade at market. I don't want to do that. Even though the delta is pretty high, it's in the money. This one looks a lot more favorable due to the spread, due to the delta, right? Pretty solid delta, due to the volume and due to the options open interest. I want to go over the actual NVIDIA trade that we talked about here as well. This is important because NVIDIA had a 4-to-1 split. So on news like this, it's pretty bullish. Now, this is where we open. We open pretty aggressively to the downside. But remember our rules, right? You have a level here. You have a level that's the R2, and it also comes into confluence with the 20 EMA. So on a 5-minute chart, it looks like you want to just buy it right away. But this is why we have right here on this side the actual pricing chart of the option itself. So it's a 2-minute chart, and this is important why you should look at these charts, because they hold their structural value as well as the actual underlying, right? So the idea behind that is that you want to make sure that you select the right option, like we mentioned, right? That has good delta, that has good liquidity, so you can correlate it fairly easily to what the chart is showing you. So here is our area of interest on NVIDIA, R2 20 EMA getting nice volume. Now, to confirm this trade, why I took this trade, we go to a 2-minute chart here, and you get this great bullish candle that pops up with really good volume. So I want to enter here with my stop just below the R2. This is enough, and there was a crap load of NVIDIA calls coming in. And you can see I waited a few candles to actually get in. I could have gotten in lower here at 350, but I got in at 380-ish, I think, right? $30 later per contract. But the idea was I can risk like about $70-ish per contract under these lows, but now I'm confirming with a much better entry at this point based on my 2-minute confirmation. So after I had done that, I'm entering here and I'm watching also how the structure of the actual options pricing reacts. Nice green candle, good options call by volume as well at that level, and I can enter with my targets somewhere starting off at this area, right? Starting off at that 600 area, that 601 to 602, and ideally we make a new top. I could have trailed it for way more gains, but we got in, I think, around 380-ish, let's call it 380. Got out around 450 for the first one, I think. So 450 minus, let's say, 380, so $70 per contract there. The next one, I think it was around like $5. So 5 minus the 380, another $120 there. And then the final one around 530-ish, right? So if I'm getting out at 450-ish out of the 370, that's a 21% gain, right? If I'm getting out at around 5 and I got in around 380, that's a 31.5% gain. If I'm getting around out the final one around 530, that means that the last gain on that one is about 39%. I could have trailed higher. So that leads us to the next question when it comes into what kind of risk to reward am I looking for. So typically I start off with a bracket of 20% risk on premium, right? So if I enter at 380, my risk is going to be $76 per contract, right? So that would mean that I am getting my stop in at around $3, so just under this low, and my first take profit is going to be around 20 to 30%. So I manage that way. I'm going to risk 20-ish percent of my premium, so I can get about 30%, 25 to 30% on my first third of my position, and then trail the rest. Once that first third has been captured in terms of profit, then I'm going to move my stop to plus 5% or zero break even, and then look for my second exit, and then move it up another few percent, look for my third exit, so I make sure the trade is risk free. That's how I personally day trade with my stops and my risk management. Now, I could have let this guy go for a much larger 100% gain pretty much if we managed to rip this top, but I just held out and wanted to get out quickly for a decent profit of about, like, I think it was like $400 total, 300 and something total on this one. So a very quick move there, and it's based on percentage gains versus percentage loss, right? So some people might go as wide as 30 to 40% loss, but I want to make sure that I'm taking home 1.5 to 2 times as much as I'm risking. So that's the idea here. And if you held throughout this whole rally, right, and you did not move your stop a little higher to secure some gains, and you noticed that we made a lower high here, there's a high probability we're going to come down and your position is going to turn into a losing one, especially when we reject this lower high here. It's pretty bearish. It's a bearish indication. So that's my risk management in a nutshell. There could be a little more to it if you guys want to overcomplicate things, but generally I'm looking for around 20 to 25%, 20 to 30% for my first take profit. If I can see it's lagging and stalling, I am not going to be shy to take 15%. So keep that in mind, and now let's take a look at something else. So if I'm trading something like that, then I'll consider a lot of those things. But if I go SPY, for example, SPY has multiple different expiries on a daily basis. So, sorry, weekly basis. 0 days to expiry, which is for me unfavorable, right? I avoid 0 days to expiries the most I can. I'm gonna go on the 3 days to expiry on the SPY. If I'm trading the Fridays, I can go 5 days to expiry, yada, whatever. You get it, right? Don't trade 0 days to expiry. That's what I don't do. And I'm gonna go 35-ish, right? 35, 40 delta. You can see these are dirt cheap, $1 a freaking contract, right? So this is what I focus on when looking for options pricing, what kind of option selection I'm going through. I want to make sure that the open interest is high. The volume can be high, but I mainly want to see if the open interest is high. I want to see the spread. How tight is the spread? And I want to look at the delta. Make sure the delta is between 25 and 45 in that range, right? So I know that I get decent profits when it moves rather than having to play catch up with these super out the monies. The way I think about it is don't go too far out the money. A cheap option is not always good because there's someone on the other side completing this transaction, right? There's someone on the other side that's selling you this option, collecting the premium, because there's a high probability chance that that option will expire worthless, especially on a 0 days to expiry or a super short expiry. Otherwise, I do trade weekly. So on Mondays, I'll trade the week of that expiry. So for like Tesla, it'll be on like the Friday on a Monday, right? Whatever it is for general stocks. But triple Qs and SPY, you have multi-week expiries. So think of it this way: if delta is like a probability, then there's 10% probability that this option expires in the money at 420. So I don't really want that, right? I want to see something more reputable, if you will. So that's what I do for my option selection. So for example, if I was trading, let's say like the SPY, because that was the main one today for me. It usually is, but let's say I go to the SPY and I want to buy like a put right at this area, right? So it's a 417.20. I'm going to make sure that the 2 minute is closing red. I get my rotations, and my put is not only based on those criteria, but also I want to make sure that my put looks like my chart, and I can identify where my support resistance levels are on my put. So if this is the options pricing for that same put that I'm trying to buy in this area, it looks completely opposite because the put will increase in value while the actual underlying drops, right? So that means that I'm buying this put when I see, okay, rotation, 2-minute rotations. Great. So I know I can buy the put at 123, let's call it. And if I have a stop at 110, it's well below this area. So I'm using structure for both the options contract and the underlying, right? So keep that in mind. Always trade with an options chart in front of you. So that is the idea behind it. And now remember, earlier on today in this video, I was qualifying a long SPY with you. How did that long SPY turn out, right? What were my criteria for that long SPY? My criteria for that long SPY were, let me see the rotations down here, and we can pick it up with the stop below these averages. So that means our entry was around 415.60, and we traded all the way up based on this strategy up to 416.14 with more potential to go. This is how we find the changes in trend and in direction. So with that, right, I was at my 2-minute as well and made sure, and I said, hey, like this is a good area that I'd try it based on so and so. Nice, good volume candles, green volume candles, right? Green rotation candles, nice wicks holding up this upside, and finally we got the pop. So this is exactly how this strategy works, right? So with that, why don't we take a look at how it would work in different circumstances, in different market environments, and in different examples. Let me just go and find some, and we'll be right back. I now have the chart of the SPY yesterday on May 20th versus Apple on May 20th. Now, I'm going to show you guys kind of like a correlation catch-up play that I like to play on with triple Qs and SPY and the FANG stocks. And the idea here is you want to find which one of these is lagging. So you want to find which one of these is lagging that could potentially catch up or catch down. Now I'm going to talk about how that panned out yesterday, how that panned out today, and how you guys can use this going forward. Now it's same strategy. It's just we're waiting for a correlatory play to kind of shape up. So what I mean by that is if a stock goes, right, or SPY or triple Qs, they go without me, right, and I can't find an entry for them, simple as that, then I will look elsewhere to see if there's correlation between the two and if I can get on board potentially on something that's lagging. So for example, yesterday you can see, let me just move it over to yesterday. Yesterday you can see right off the gate, triple Qs, which I think triple Qs are a very, very strong leader for the overall markets like SPY and FANG names. Triple Qs off the gate start rallying. What does the S&P do? SPY starts rallying, right? And I'm looking at this and I'm thinking, okay, well, where the hell do I get long based on my pullback criteria? I don't want a breakout trade because it's kind of slow and sloppy. And these guys are just ripping, they're going for it. And I'm like, okay, where do I get long? So my thought process is these guys have been disqualified because I just can't get long. On a pullback, yes, let's find a pullback for me to get long. And I'm going to show you why this necessary pullback did not work. So I'm going to look for a pullback to get long. So I'm going to look at something like Apple, right? After I draw my levels, I'm going to look at something like the Facebook, right? So when we get a rip here aggressively, leading with SPY and the triple Qs, I'm looking for just a general pullback zone, which in this case would have been here based on this criteria, but more so, wait for the break and a retest, which is a little late, but you're waiting for that R2 that held as resistance, breaks above, pulls back into the 20 EMA region as well, and you get your rotations. This is the long moment for the catch-up play on Apple, right? You have one here based on the zones. You have one here as well for that rally to continue. You even have one that's even better at the pullback zone and the EMA right here on the 5-minute, so on and so forth until the end of the day. Now, SPY, on the other hand, you can see we go aggressively higher. And the more you deviate from these EMAs, the more they want to kind of pull back into them, not necessarily to hold them as structure, just pull back and consolidate around them. So this drop here into the R2 area, why was this not a good long? Because we have a level here, we have our EMAs, but why was it not a good long? Look how aggressively volume comes in off the drop. Volume is increasing steadily downside pretty aggressively. No real buyers are coming in at all. You go to a 2-minute chart, it's the same thing at that same area. There's no buyers whatsoever. It's rotation, but slightly to the downside. And at that point, I don't want to buy this unless there is momentum back to the upside. So when I find that price rallies back above our level, back above the R2, pulls back into the 20 EMA, and that's your chance for the longs, right? So looking back at the trading idea that we had while we were recording this, we came all the way up 416.20, a decent move, not a crazy gainer, but that is how you play this strategy, especially on the reverse. Now you can look at triple Qs too yesterday. Triple Qs a lot stronger, and if you waited for the pullback, it would have been in a zone in the EMAs late in the day, 12:45, but you're getting a very good extended move to the upside. So it's just patience. If the trading strategy isn't there and your confluence does not come to fruition, meaning that the ideas that you had and how you were going to trade them don't come to fruition, then you just don't take the trade, right? Which happened today as well. So triple Qs being a leader of sorts, we got a strong pop on SPY off the morning, and triple Qs sold off aggressively. So tech is selling off while SPY is going up. For me, I don't want to necessarily keep buying the SPY, especially when triple Q started breaking down this second wind aggressively. So another correlation play here led us to look for shorts on both SPY and triple Qs. Triple Qs more so because they were the weaker market. So that was it. Everything explained. If you guys have any questions, you know where to find me. Join us at community.tradeproacademy.com, and we'll see you guys in there. You can ask me questions on Twitter. You can ask me questions on YouTube, whatever you guys want. But this is it. This is the main strategy, how I break it down, everything that needs to be known pretty much, and how I do it. Obviously, some tiny details and sentiment were left out, meaning that sometimes there is a more natural feel as to what you should do, how you should do it, but there's also a systematic confluence trading strategy behind that. So again, this is going to be done in a deeper dive in some of the TradePro courses, but I think this is an amazing foundation for those who are looking to learn a very simple trading strategy from start to finish and how to identify that opportunity. So I've shown you everything that I do. I've even showed you a live trading example here today, and I hope you take this information and apply it and educate others with it. So share this, and I'll see you guys in maybe one other video just like this later on. Thank you everyone, and take care.